Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim, and this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. So the stock market continued to grind upward this week. Tariff talk really calmed down, and the Syria bombing came, and it was pretty much one and done. Well, 100 and something Tomahawk missiles and then done. And the stock market continued to follow a path upward that it began 2 weeks before. Well, that is until Friday, and I'm going to show you a little bit of a breakdown that happened actually today. The rally really coming from commodity stocks, as material stocks have been surging on the upside. The NASDAQ was helped by Amazon. An amazing 200-point leap in some 9 days as Bezos came out and finally released some figures regarding the number of members in Amazon Prime, over 100 million, and that really got investors interested, and the stock really got into an upward surge. And then there were some analysts that came in and they upgraded it, so they're pretty happy with the 200 plus PE, I guess, and I guess they just got the shorts by the short hairs, and that helped the stock move up. It's pulling back a little bit here on Friday, but not much. Thursday did see the NASDAQ stop its upward move on a report that iPhone sales had slowed. Apple got hit hard. It's got hit hard both Thursday and Friday, total of some 10 points off of its highs. Also feeding on the tech weakness was Taiwan Semiconductor, which came out and guided lower, partially on Apple, but then also news came out that China is planning on increasing their semiconductor production, and that is weighing on the semiconductor stocks. I'll show you some of that as we come up to the best and worst stocks for the week. Overall, that is killing the tech rally, and we're starting to see the NASDAQ pull back pretty sharply here on Friday. The focus really, though, has to be on the bond market and on the Fed. Fed heads are out talking, and really out of both sides of their butt. They want to raise rates, but also at the same time they're saying they're not going to invert the yield curve. I really got to wonder, what are they looking at? At the low point last week, the 2s to 30s, the yield curve was at 43 basis points. The 10s to 30s were down to 15 basis points. They've expanded out a little bit here as the bond market sold off this last couple days, but they can't have it both ways. They can't raise rates and avoid inverting that yield curve, which everybody looks at and says that tells you about an impending recession or a slowdown coming. I'm not a conspiracy theorist. I'll leave that for Alex Jones. But the only way that this can work for the Fed is if somehow they can crack the bond market. In other words, get the longer rates to move up very sharply. And to do that, their tack could be selective data releases to give a sense that the economy is strong, or that inflation was going up, or wage inflation had a reason to go up, or they could do reverse twist. Remember when they did the twist, when they bought the long dated and sold the short dated in order to get long rates down? Well, now they could do the reverse twist, and they could go the other way, and I wouldn't be surprised to hear something like that come out, so they can raise rates and avoid getting that yield curve inverted. And don't tell me that they won't manipulate markets, because we've seen them do that well for the last 10 years, and how about the Fed doing it well way back since Jekyll Island? You don't know what that is? Go read the book. So I think that the Fed has got no choice, and I think that the bond market has started to move on the downside. We've been cautioning about the intermediate patterns in the bond market, saying that there was we were in a phase that we believed that the bond market could rally, but it was very deficient. It was not able to get very far on the upside. In other words, interest rates not coming down by very much. And what that did was set up this downturn, and the bond market is at risk of resuming a plunge to the downside, and it's, I believe, exactly what the Fed wants. So that really starts a domino effect. As rates go up, it attracts investors into the U.S. market, into the bond market, to benefit from the higher interest rates. So that attracts money into the dollar. Now, we've seen the dollar strengthen this week. When you get that stronger dollar, well, the inverse correlation is that commodities will fall. And we have started to see gold pull back. Silver, which had a big bulge, is now pulling back some. And with the NASDAQ leadership now seemingly gone, the financials unbelievably weak. They have been reporting earnings and not able to pick up their heads at all. Good earnings, and the stocks open higher and then reverse to the downside significantly. Take a look at JP Morgan or Goldman Sachs. You'll see that. So we don't have financial leadership. We don't have tech leadership once this Amazon bubble busts. That's really the only one left in here, because the semis are weak and Apple's turning weak. And if the dollar goes up and commodities turn weak, well, the commodity stocks have been strong. What's left to lead this market to the upside? We're making a point here that the pieces are all fitting together, that the next leg of this market correction is not that far off, because the leadership really is deteriorating in here. Now, we have a sense, and I'll show you in the short-term view, that the market could stay in this range it's been in and keep churning and thrashing into the early part of May. But then after that, we think the risks are really going to go up. And we're going to show that to you as we get into our short-term view. In the meantime, let's take a quick look at our 60-minute chart of the S&P 500. And you will see here, you'll notice that upward channel that you see there. I'm going to move this back, and you'll see that that channel existed there last week also. You can see we're going back the whole 10-day period in here, and we showed you that upward channel last week, and you could see it's come down and touched it Sunday night, and continued, touched it here on Thursday, and then look what happened on Friday. It broke down through it. So that got some selling coming in, and Amazon started to lead on the downside right over here. So you could see it touched it way back over here. It touched it over here almost, touched it here, and then finally broke down through it. So people are watching that. What happened this week? Well, not a whole lot of news in here. Here was that Syria relief after the one-and-done bombing, and the week before we had that China Xi coming out and talking down tariffs. So the market opened up on a gap here overnight on Sunday night, and then continued up here on Monday. Netflix reported earnings, and they had, that was a Monday after the close, they had very strong sub growth, and the stock jumped and the NASDAQ jumped, and you could see the stock market strong here. The NASDAQ gains 150 points here on Tuesday. Goldman Sachs was down after it beat, and XLF was small down in this kind of an up move. So the financials really crazy, underperforming when you see that. The next thing you can see here, what happened on Wednesday was we had record earnings from Morgan Stanley, and that didn't help anything really. Beige book comes out and prices increasing. That is one of those pieces of news that the Fed wants to get the longer rate up. So again, I believe that we're going to be seeing a lot of that because they want long rates to go higher. Here, Amazon Prime news is released right over there, and Amazon explodes to the upside, but that didn't really help the market that you can see here on Thursday. Apple dropped really hard as the iPhone 8 sales were showing weak demand on a report, and Taiwan Semiconductor weak earnings hit the whole semi group. 30-year bonds down 1.25 plus, and you can see we got a lot of selling coming in right here on Thursday. And Friday, you got this sideways move overnight, and then this downward acceleration here as Apple got crunched. There were some other big decliners in there, man. Skechers got annihilated. Not that that's much of a market leader. I'll show you that in just a moment. And you can see that there was a pretty good decline in here. But then here with about an hour and a half to go in the day, the market has calmed down a bit. So that is a look at the 60-minute chart, and you can see what happened then during the week. For the week, the stock market indexes right now still fractionally higher after rallying through Wednesday and then pulling back Thursday and Friday. Bond market 30-year down about 2.5 points. The 10-year yield pops up to 2.94. That's a 4-year high for the 10-year yield. And the 10-30, that's the yield spread between 10s and 30s, has moved out a little from 17 basis points now to about 20 basis points. So that has to give a little bit of relief to those watching this yield curve flatten day after day. Dollar gains about 0.4%. It's not a big move. We think it's going to move a little bit more to the upside. We'll show that to you. Gold. The rally in the dollar really weighed on gold. Gold rallied into the middle of the week, and following the bonds then fell back in the last couple days of the week. It lost $9 on the week for the gold market, which would be the proper inverse correlation based on the dollar getting stronger. Oil moving up sharply. There's discussion in the oil market about Saudis wanting to see $80 oil and somehow them manipulating it up there. I have a lot of doubts about that also, but we see a dollar gain there. We've seen record production in the United States, so I don't know how they're going to get it up there unless it's the Mideast crisis, and you got to keep your eye on Israel and Iran, because Israel's got its sights set on Iran, who's been building military around them, and they're not going to stand for it. So we could see that really heat up, and that would be what would push oil up pretty significantly. Okay, that's the opening segment. We're going to get to our best and worst stocks for the week, which is always an informative piece. But before that, I have a crazy, exciting announcement for you. Don't speed up here. I want you to watch this. It's only a few minutes, and it's something new that we're coming out with, and I think you're going to want to see this. So hang in there. Are you interested in trading the stock indexes or interested in the stock market? We are excited to announce you can be part of our beta test of our new service. So many people have wanted to see our cycle analysis and momentum analysis, and our chart service is a big commitment. So we are creating a new service, Stock Index Cycle Trend Momentum Report. Kind of a long name. We're calling it the SIR, Stock Index Report. We're beta testing it now, and all of our members get it. You're going to be part of our beta testing in here. If you're not a member, all you have to do is sign up and become a level 1 member, and you can be part of the beta test also. No cost to you at all. You'll get a very comprehensive and complex service that, again, no cost. That's all we want is your feedback. Take a look at it. Use it based on your own needs and your own engagements in the market, and then give us some sense around what you like about it, what you'd like to see changed, and that's what a beta test is. And then once we get through about a month or so of that, we're going to evaluate it, see if we can tweak it, and then bring it out as a standalone product. So we want to just have you look at it and use it and let us know. So I want you to right now is to take a look at this product, how you get to it, and it's really easy, and I think you're going to be fascinated by it. Here's the front page of our website right there, and for those of you that are there all of the time, you're going to notice that there is a slight change there on that website, in that there is now that box right over here that says beta testing. That is beta testing the Stock Index Cycle Momentum Report. All you have to do is click on that, and it's going to take you to this sign up page. And you can see that this is the level 1 sign up, and what's called level 1 deal. And that is no cost at all. All you do is click right on there, and what you'll be getting is, well, the archive for the market week. You can go back and look at what we said in the previous weeks. You're going to get all of our special level 1 member videos that we put in there, some very interesting ones, and the new product beta testing right there. So all you have to do is sign up, and it's really easy. We're going to take only a minimal amount of information, and then you're in. Once you're in, you're going to go to your dashboard, and this is a dashboard that has all of the videos on there also, but what we're going to be looking for is the stock index beta report that you can see right there. And when you click on that, it is going to take you right here to this page, stock index cycle and momentum report. So there's a lot on this page, and what I encourage you to do is to look at these menus right in here. These are all drop-down menus. So this is the overview, and this tells you how to use the report right there, and I'm just going to pop that back up. And here is the stock index summary, and what that does is it gives you our momentum and cycle analysis on 3 time frames, monthly and weekly and daily, and it depends on what style of trader you are. You're going to get a sense for what the momentum looks like. So we give you, in this case, you could see all 3 stock indexes are bullish momentum for the monthly condition. For the weekly condition, they are negative and declining, and for the daily in here, they're negative and peaking. And we've actually seen the market roll over here, so that was accurate. And then we give you some sense around the average dates that we think that particular low dates are, or corrective processes will go down to. Here is the stock index helpful hints for the momentum conditions. So you just kind of read through this. This is going to take a little work for you to get, a real good understanding of. And here is our momentum tracker right in here, and you can see right there that we give you the momentum for the daily charts right there, and you can see which of the indexes are weaker or stronger. And you can see here on the 2-hour, on the daily, the top one is the daily, and the bottom one is our 2-hour with the market condition indicator, which we'll give you an update once a week on. Our charting service has updates on that live on their chart, so that's the difference, is that it's not live versus the charting service. So that's the momentum indicator that you're going to get right there. A lot of good information. And then you can see SPX overview, NDX overview, and Russell overview. I'm just going to show you the S&P 500 so you can see what we include in there. And there is our weekly chart with our projection that you can see there. There is our daily chart with our projections also that you can see there, with our cycle analysis and annotations, really very informative. And here is the 6-month with the slim ribbon in there, and similar to what you saw in the momentum indicator on top. So we actually may end up not needing this because we're showing it to you in 2 places. So that is what's in each of these indexes, and just a ton of information that you get there. You can see, looking at this stock index cycle and trend momentum report, that it is complex, it's comprehensive, it's if you want to start to learn cycle analysis and you believe in the importance of momentum analysis, this is going to be really helpful to you. And again, no cost. All you have to do is sign up, and we just ask you to send us back feedback. In the meantime, you can learn from us, you can benefit from our work, and your help on editing, redesigning this product is going to be great for us. So that's it, the SIR, and I hope you enjoy it, and I look forward to your comments. Go to the bottom of that page under the charts, and you will see a comment form, and just send us a little note. Let us know what you think, what you'd like to see change, what you think is really great. Thanks a lot. All right, here we go. Best and worst stocks for the week. We do this every single week, where we take a look at the biggest movers, the best patterns, things that I think you're going to be interested in because, well, the market has them moving pretty significantly. One of the first ones we're going to look at is a stock that's on our list of best for the year, and this stock has now started to take off on the upside. Interesting story on this one. This is Sun Power. So you can see here that we have our cycle analysis there. And amazing how many people right now we have taking our cycle analysis workshop. So if you were interested in that, please do go to the top of our website and click on workshops and click on cycle analysis workshop, and an amazing 20 module video workshop there. So this is our cycle analysis we're looking at in here. We have the colored phasing in this cycle, and essentially when you have the rising phase, it's green. When you have the corrective phase, it's yellow, and if it turns red, it's a negative phase. Generally, when you get a negative phase, the probabilities are only about maybe 20 to 30% that you will take out that high. So this is a rare, strong picture that we got there. Overall, you could see that it was tracking up this kind of shallow, rising upward trend for these last couple of years, and now is in this rising period right in here and is exploding. So when you see these blue, we call those timing spikes, that's the time period that we expected the low to come in this correction, and you could see that it's done that. Now moving up past what was the intermediate resistance zone over here, and this green upside zone says that we're likely to get at some point back up to this level. Now it could be in this cycle, it could be in the next one, so it might actually come up something like this. This is a strong, very bullish pattern, up 21% on the week. They buy a U.S. solar company, Solar World, and this is a way for them to skip the tariff issue, as they have this ownership in a U.S. company, and that is just probably a really good strategic move. One of our best for the year on our list. Stock market's not up very much. This one's up about 16 or 17%, so we'll call that a good one so far. In the same group, we were also positive on First Solar. This stock just explodes to the upside as their earnings just have been upgraded and upgraded, and buyers coming in there pretty good. This is our fib extension zone right up over here where we expected the stock to trade up to. It got up there and then failed, and now has gotten up there again and is rejecting. We wouldn't be surprised to see this stock rolling over for a time period in here. Well, we think June is the time that the stock market's going to end its corrective period, so no reason this one shouldn't be way down a little bit. We think there's a better buying opportunity coming, and this is really a resistance zone. But First Solar, following SunPower up, gaining about 6% on the week. Next one we're going to look at is Twitter. Twitter's another stock that overall we've been positive on. This big toppy formation came on the Facebook data breach, where you got this big decline right over here. Let's take a little closer look, and you can see we have two projections in here, and we tweeted this out today. The question is the resistance area here going to hold it? And you could see where it got right up to there and then roll over and correct into July. That's what that looks like. Or, being that this is only the second week of the advance here, and you could see none of them peak in the second week, they all go up for like a couple of months, that makes the likelihood higher, and we're always looking at formations to give us odds, that we're going to follow the more bullish track. We tweeted that out today, asking the question, what did you think? Do you think it'll stall here and then roll over? Or do you think it will follow the bullish track and get back up over 37? Our vote is going to be the more bullish. MKM upgrades it this week, gains 13%, and this is, as we say, an important spot. Earnings on 425 before the opening. As I talked in the beginning of the show, we have seen the material stocks gaining in a pretty good way as the materials have gotten strong. Now the question is this aluminum spike that we've had going to be able to continue? With the dollar strengthening, are we going to start to see commodities give it up? So we've had these good moves. Cliff's up about 10%. CLF on the week, but you know it's turned up, but there's certainly room for this to give back a little bit if the dollar gets stronger. Cliff up 10% on the week. This analysis in here is a little different in that I've used channels in order to give you a sense for the average ranges that it trades in while it's in specific phasing. So in this rising phase right over here, you could see the range that it traded in, and generally ranges narrow when you get high velocity velocity. You can see that. Here was high velocity on the downside, and the range narrowed. This was kind of like a neutral pattern right in here. We call that the ideal or neutral cycle right there. And it was kind of a steady range that you can see, and it did something similar right in here. And here you could see where the DBA, that's the dotted line, the base metals, turns up. And the same thing for Cliff. And it's now turned up. You could see the channel turning up. And outside of potential little pullback in here, which we think would be a buy, maybe right around 7.5, 7.30, we think that the stock looks like it's still headed higher for the moment. FCX, which is a gold and copper stock, both, follows it on the upside. And this is a bullish pattern, and we were expecting this nice move. So here you could see, here's the DBA again. That's the base metals in that blue cycle pattern. Now these are the ideal cycle patterns measured from low to low. So you can see that there's a synchronicity, or nesting as we call it, between copper, and this is gold, and this is the DBA, and this is the FCX. So we see the bottoming in here, all of them, and then the upward turn. You can see that as the velocity comes in just magnificently here. You get the minor corrective period here, which comes down, and then you get the next advance, and it explodes to the upside. This, the probability is high that it's going to take out $20.25 there. So if you get a pullback in here, again, we're only 2 weeks into this rally, the probability is good that it's going to continue on the upside. So right now, the materials still look okay. If the dollar explodes to the upside, we're not sure it can do that without a collapse in the bond market. Maybe we can get both. As long as the dollar just kind of easing around, these material stocks can still make some upside progress. Next thing, we're going to look at Square. Square moves up 9% on the week. I have not liked this stock. This stock is on my list of riskiest for the year, and that has been wrong, as the stock has benefited from Bitcoin, benefited from the cryptocurrencies because they're going to do transactions in it, and Bitcoin had a gain this week. And it was almost perfect, like somebody had pre-written the story that this should be the week that Bitcoin strengthens because that would help Square, and it moves to the upside. They have acquired a food delivery service, Zesty, but that is not what's moving this up. And you can see in here that we called this one of our riskiest stocks for the year in the face of bullish patterns, 1, 2, 3 right there, because we thought the 100+ PE was going to get it. Well, it's still at 100+ PE. And maybe 120 right now, and the stock is still tracing out bullish patterns. Higher high, higher bottom, and now moving on the upside. And here's where the low is projected, and here's the next rally projected here. You can see each of those cycle rhythms absolutely perfect in here. So just like somebody had said, you know, this is the week we need to rally Bitcoin so that we can get Square up, well, you can see it all moves together. So perfect. And we could probably expect higher prices and maybe even new highs in Square before this thing is over with on the upside. United Airlines gets a jump, UAL, you could see that right there. Bank of America has upgraded them. This is an okay pattern in here, and I say okay because, well, you see this low here and you see this low here. Well, it's clearly an uptrend right in there. And then you could see that it is continuing that type of a trend. We would expect it to roll over here, correct a little bit. And then again, just like so much that we look at, in June is a bottom expected. And this is our time that we would invest in this stock. I mean, we think that it would be powerful and then be moving up again after that. So we're just going to look for between now and June it to kind of roll over and give some ground, and then after that be a good opportunity. American Express, their earnings beat. They're up 8% on the week, AXP. Here's the weekly chart in there. Excuse me. And this is kind of a rare pattern. We're going to call it a rare pattern because you can see how long these upward phases were right in here. And when you get one that rolls over like this and gets under the trend lines, under those moving averages, and you can see the 34-week moving average has been good support for it. Then generally when it does that early in the pattern right in here, it says that there's a high probability that a rally will fail and it will roll over negatively. So that's why this becomes a yellow zone. It warns us that the probabilities are high for a decline. The probability of taking out the high is less than 20%, but that means 1 in 5 times it will do it, and this is one of those occasions. So we're going to call this a rare pattern in American Express, earnings strong, and now we'll be looking for this to roll over and then move to the downside. Last stock we're going to look at in here is Amazon, which is the stock that really helped drive NASDAQ up early in the week. This is also on our list of worst for the year, riskiest, worst, whatever you want to put it. And we have felt that these type of earnings estimates are way out of line. And even if this is correct, for 2018, you're trading up close to a 200 times PE. There is no room for error in here, no room for a mistake. And here again, we have a yellow zone and a stock moving up sharply in the yellow zone. So you could see the minor patterns right in here. That's these blue dashed lines right there. And we are now finishing this rally, I believe, and then getting into this corrective period. Nested lows. There are 3 cycles pushing down right over here, which say that this period is a period of great risk. I think that this was somehow anomalous in that, like I said earlier, the shorts got really caught by that Bezos report. But President Trump is not done with Amazon, and the war between he and Bezos is going to continue. He hates Washington Post, which he owns, and on top of that, he believes Amazon is stealing money, basically, from the post office. So this is not over with, and we're going to get into a time period here where Amazon is likely to decline. I have been short Amazon for about the last 60 points. Teeny tiny little position, and now today it's giving some back, which is helping. But I was definitely in it early, and we had a trade set up in there we had to remove because it moved through these resistances. So this up strongly, 7% on the week. And we don't, really think that this is going to continue. Credit Suisse upgraded it today. They said there's 15% more on the upside, and I think they're out of their frigging minds. That is the best stocks for the week, and we are going to be right back where I bring you the worst. All right, worst stock for the week. I mean, it's one of the worst stocks I've seen for the year so far. Skechers gets absolutely cratered. This one, just incredible move to the downside and comes down to a support zone right now. Man, it got there really quickly. Take a look here at this weekly chart. Remember, we're looking at all weekly charts in here, unless I say let's take a peek at the daily chart, which I think I'll show you in a few minutes on a couple charts. Here is the cyclic patterns, and you can see the clarity in here as you get the important low that lines up right over here and then the rally. So I'm just going to trace out the cycles for you that you can see. The bottom are the ideal cycles, as if every single cycle pattern was exactly the same length, but the principle of variation says they're not. They do vary, but you can see how they resolve themselves in here. Perfect cyclicality. Then when the directional component strengthens and moves up past these highs and through the resistances, it gets the buyers excited and it explodes up. Now you could see that this corrective period in here only brought you a week and a half on the downside, and it moved back up strongly. This rising phase right in here was very weak, incredibly weak. In other words, it could barely get above those highs and then broke to the downside on this really bad news. I mean, their earnings missed, guidance really weak. This was a shocker as far as that goes. This is support. Now, where does this support come from? It's those peaks right over there and this low right over here. That's really where it comes, and it's just right, below the 50% of that big major move. The next area of support is down here around 24, and our projection on the downside is to late May or early June. So if that's the case, what is the probability that after breaking this low and being a negatively configured pattern like this, what is the probability that a rally can hold in here between now and late May or June? It's like next to zero. So if you get a bounce in here, it's going to be a short and very likely to come down again. This is why we use cycles, to give us the highest probabilities when we look at that. So Skechers scares the you-know-what out of the Foot Locker holders. And you could see this rolling over right now. So this cycle low support right there is at around 38.08. It's 2 points from there right now. If it breaks that, it's a violation that's negative, and also it would be coming down into July. Just rolling over like this under this resistance below these highs is a negative occurrence. So this one really is telling us there are problems out there, and this is, could be a signal about consumers, I guess, when you look at that. That's Skechers, massive breakdown. Foot Locker looking really bad. Philip Morris, this one, take a look at here. This one we tweeted out. Their earnings beat, but their revenues were horrible. They're down 17% on the week. Now, what do you notice here? You see those two timing spikes on the bottom? Why we have that there is because we are trying to remind ourselves when we're getting into late stages. Late stages of declines, when a stock is bullish, gives you modest declines, and then the next rally gives you upside movement. That's cycle theory right in there. When it configures negatively, then the rally fails, usually at resistance. 34-week moving average, 50% of this distance, pretty clear right there, and then it rolls over and gives you another big leg on the downside. Right now, if you look at this declining phase, well, it lasted a long time, and then there was a capitulation for 3 weeks right in here. This one's a little different. You've got this rising flag pattern or pennant right there, and then it broke down on that. But this is the bottoming area. We believe this is a capitulation. But you can't invest in a stock like this. It's a nightmare. So what you do is you let it bottom. You look for signs that it's bottoming in here in this range of time, and then you can nibble on it or something and look for a bounce. If you look at right in here, this bounce off the cycle low gave you a rally from 102 to, let's say, 110. So you got an 8-point bounce in there, and you could get a 6 to 8 point bounce in here. But is it worth playing for that? And we don't know if the capitulation is over yet. So that's really it's been a horrible pattern. It remains a horrible pattern as the cycles have continued to warn cycle patterns that there was trouble in here. Bristol Myers. Now, why do I say Bristol Myers the way I say Bristol Myers? Because we were bullish in here. We had a bullish setup that was believing that after you get a 1 or 2 week rally off that and you pull back, that is a buy area in support, and then it goes back up over here. That is the highest probability. You can see right in here, rally, pull back, and then another rally. But that rally failed. But at least it came. In this case, well, some news came out, a competing lung cancer drug, sorry about my cold, has Merck has it, and that really has got the investors shaken up in Bristol Myers. And you can see once it gets below that cycle low level right over here, that's negative, and it's not a surprise that it collapses. The low is due in June, so we project it to go down to somewhere around these lows over here under 47. You can't buy this stock now when you look at that, unless you're just a scalper for a day trade or something, because the pattern is just so bad. It may bounce, but analysts are downgrading this one like crazy, and it's not one that is worth a shot in here. We had to pull our long long setup, and I had to sell out my long position based on that. Next one is Applied Material, MAT. Now, this is another interesting pattern to look at when you look at this, because you see the broadening pattern in there, or what they call a megaphone. Cycle pattern's very clear when you look in here, and that is that this was your pretty cycle right here, positive. See the configuration here, says you're going to go to new highs, right? Positive, says you're going to go to new highs. You did, but now you're rolling over in a big way. And the problem is Apple, Taiwan Semiconductor, China producing more. And if that's the case, then Applied Material, which makes semiconductor materials, they're breaking down. See it coming down through support? Again, the low is projected out in June. I'm going to keep saying that because it so signals that the stock market correction is going to go into May or June. This now points to get below the 78.6 or maybe down to this area over here. So we'll look for 45 to 47 on the downside in here. And again, if you get a rally in Applied Materials, it looks to us like a sale. Let's just peek at a daily chart in here. And you can see in here the breakdown that occurred. And we're going to look at these cyclic harmonic families in here. When you get a major cycle right there and you get a minor cycle that divides it in half, so sometimes they're very clear. You can see the big cycle right in here, and then you could see the minor cycle right in here. The second one is supposed to make a new high, and then they correct together. Next one in here, rally, comes down, rally, and then they correct together. Rally and breakdown. You don't get that. Remember, you didn't break down here, or you didn't break down here in the first cycle, but you did here. So what that says is that somewhere right in here, you're going to get a bottom. It's going to try to rally, and you short this rally, because then they both come down together like they did here, and you get a whale on the downside right there. So this is a point where you should get a bounce, but we have a negative pattern confirmed in here. And also I want you to see that you have had the momentum, which had turned choppy, turn negative again right over here. So Applied Material, that is a bad looking pattern. Let's just take a peek at the weekly chart we'll just keep the side-by-side up right now, which is the weekly on the left and the daily on the right. Here's your Taiwan Semiconductor on the left. Look at the head and shoulders in here. That is completed, and now you can see that. Well, let's look at that. So your left shoulder right in here, your head right in here, your right shoulder right in here. So that's this and this and this. And by the way, Head and Shoulders tops are made by cycles. They're not just pictures on charts. They're made by the energetic changes that cycle analysis tells us about. So where are we now? We're likely to get a bounce somewhere off of this level. And usually it bounces back to the neckline. And you can see the neckline is also that 34-week moving average coming up right there. You can see that. So it seems to me 41 to 42 is the shorting area in this stock, and then it's likely to head to the Head and Shoulders measurement down over here, which is at around 36 to 37. So this is a really bad pattern, and we'll be looking for a bounce that lasts for a few weeks and then gives you another picture of a stock that looks like it could break. Here you could see that if you look at the slim ribbon right in here, you see the slim ribbon turn negative right there, and it signaled the problem, and then it got under the 89-day moving average, and then you have the big gap on the downside. So this daily chart really did tell you a lot when you looked at that. Again, that's the weekly on the left and the daily chart on the right. One more semiconductor we might as well peek at. That's right in here, which is Marvell. Now, this has got some beautiful cycles in it. What we tend to do sometimes is, for clarity, is I'll put one cycle in one color, and I'll put the other cycle in a dashed or a dotted line in another color, so that you can see the clarity in here. Now, when you see the perfect cyclicality that's in here, and the major and minor cycle both acting together in consort, you know that this cycle breakdown here is ugly. And the reason for that is because you can see this first minor cycle was positive. This first minor cycle was positive. This one was positive. Each of those gave you a secondary rally right in here. This first cycle is now negative. It's the first one right in here, and that's why this failed and came down so hard in here. We'll be looking for a couple of more weeks down. We'll be looking for a fake rally and then a collapse here in Marvell. This is a bad looking pattern, and that is the semiconductors for you. IBM is a stock that broke pretty badly in the last week also, 8%. They had good earnings. It beat on its earnings, but it really was based on a one-time tax benefit, and then it gave its projections for the second half, and the guidance was weaker, and the street hated that. So they sold IBM down really hard. Let's take a look here at the IBM chart. And you're going to see again the nature of cyclicality and the importance of understanding these phases that we're in. Now, I want you just to look back at the beginning of this chart. Here you could see where this turned red over here based on our cycle setups. Look what happened. I mean, it just absolutely collapsed when that happened. This was the breakdown of the next cycle, and when it turned red, it broke down in a very big way. Then we had a positive cycle, and then this one negative right over there. You can see it actually closed lower than it began. That tells us the probability is low that you're going to make a new high. Then when this rallies and turns over so sharply, it says to us that there's a lot of risk in this stock. But it fooled us. It rallied all the way back up to that high. That is very unusual for that to happen. But still, I think the original message was strong, and you can see IBM collapsing here and breaking underneath this low. That's a violation. Guess what? It points to declining into June. It's probably going to get down under here to that 139 low at that point. It's 144 now. So if you get a bounce in IBM in here, you got to sell it. I mean, it just is a screaming high probability that this stock is going to move down again after a bounce. So a pretty bad move there. And one more we're going to look at in here, Abercrombie, ANF. This is a stock that has done incredibly well. But when you look at that, what do you think? You understand candlesticks, you understand cycles. You know that candlesticks give you signals at certain points in cycles. As a matter of fact, you could see this is a nice morning star, and it said there was going to be an upside resumption right in there. And this is a perfect engulfing pattern right there, and that's likely the cycle peak. That points to mid-May on the downside in here, so we're going to look for the stock to give up ground down to about 24 bucks. That is our worst for the week, and I think some really good information. Did you like it? Let me know. We're going to be right back when we look at our short-term view for the coming week. All right, short-term view for the coming week. Don't forget, follow me on Twitter at askSlim. Subscribe to our YouTube channel and give me a thumbs up, of course, if you like this video. And if you didn't like the video, tell me why. Don't just give me a thumbs down. God, I can't stand that. Tell me what you don't like. Then also don't forget that we offer specials, and that is that you want to try us out. I want you to try us out. So if you want to try all of our videos, like close to 300 videos, $16.50 for the month. It's a half price, and you can binge watch all of our videos. If you don't like it, then just cancel. For our level 3 service, you can get our rankings and trade setups and all of our videos for 43 bucks, half price on for 1 month, and again, you'll love it for that whole period of time, even if you don't want to stay. And then if you want to get all of our charts, 80 of the best traded symbols, right on your Thinkorswim platform, because TD Ameritrade is our preferred broker, then you can, for $64.50, get all of our 80 best symbol charts right on your platform, and also get the rankings and trade setups and all of our videos, $64.50 for a month. Unbelievable for you to experience what we do for that. And trial memberships, and again, if you don't like them, just write us and we cancel it, and no issue at all. So that's it. Let's get into our short-term view for the coming week. We're going to look only at daily charts. We're going to look at basically the key 5 futures in here when it comes to the indexes, and it comes to light crude and oil and gold. We're just going to look at the main ones, and then if you want to get all of our intermediate analysis and see our really in-depth analysis, that's in Future Speak on Wednesdays. And again, if you try our trial membership, you'll be able to see that. So I'm going to switch over to a 2-year daily chart because that's where we get our best alignments on these cyclical patterns. And I'm going to start out by looking at light crude, and we'll take a little accountability on how I did last week. Last week, I'm going to give myself at best 50 or 55%. Really way off on the bond market. We thought the bond market was going to get into another big leg on the downside, but we didn't quite think it was yet. We thought there was going to be another move to the upside first, and now the bond market has kind of skewed itself and not looking like it's got a whole lot of bouncing in it, maybe a little bit. So let's take a look here as we look at light crude as the first one. Light crude, we thought it would get up to between 68.90 and 70.75 and then roll over. Well, it's pretty much what it did, right? As we got this rally. Now you could see our projection for the coming week, and all of our cycles are in there also. So we have the cycles that are these are the ideal cycles right there, and these are our projected cycles based on looking in the future. Cycle analysis projects out in time and price, and it's one of the only type of analysis that will do that. So what we're looking for, as you can see, is that we're getting into a corrective period. And with the news coming out about U.S. production at a record level, as you could see right here, came out on the 19th, that really stalled the move. So we're kind of looking for it to just roll over and here get into this downside move. Momentum is strong. So here's the momentum indicator right in here. When you have strong momentum, the probabilities are high that the decline, the corrective phases, will be minor. So that's really what we're looking for, a drop that really is kind of shallow. You can get into this area of 66.70 to 65.80. That's really the support area that we're looking for, and we think it'll be a minor down week in the light crude market, in the energy market. The dollar, which is $DXY, did get some upside legs in here and is starting to move up, and you could see it has proven the shift. Now, those of you that are taking our cycle workshop, when you look, I think it's at module 8, I talk about sometimes you have to figure out these things when they start to change. And we looked at this potential shift out right over here, and then when it moves up, it proves it right like this, and now we are back on course. We know that this is the highest probability track it's on, and the dollar is likely to make a higher high in here. That would get it up to what was our original projection, up around 91. So it's 91 is really the resistance area, and we're going to kind of focus on that. Momentum, look at this slim ribbon here, incredibly indecisive. We have nothing to say there about the momentum, so we're not going to get much out of that. We thought that the dollar would rally, and sure enough it did, and we thought that the euro currency was the better trade and that it would move to the downside. Oops, sorry about that. And here is the euro currency right in here, and you could see as it rolls over, and it was a better trade. And now, see the cycle support right there, and if you break down under there, you're negative, and then here's an intermediate support right over here. So you can see this projects to the downside. Also note, for those of you taking the workshop, there's a bullish VTL here, valid trend line, and there's a bearish one here. And we've been narrowing in that zone right there, and it looks like it wants to take out the downside, right? Also, momentum not giving a thing away in here and looking like it's going to, though, break to the downside. And we're going to be looking for a move down near 122 in the euro currency. Gold is next, /GC. And you can see the gold minute move in here as the dollar firmed, gold backed off. Big move up in silver actually in midweek, but that's rolling over also. And you can see, now this is your cycle pattern right in here, and they may give you a little early bottom, which is positive. When you get a positive early bottom, the odds are high that you're going to exceed that high, and you did, but you really couldn't stay there. Now I have a little bit of concern because of the stronger dollar, and that's an issue. Gold momentum is still positive. It turned positive back over right there. You could barely see that arrow, and it's been, you know, trucking up since then, but now I'm a little concerned about the way this is looking. Now, when you have positive momentum that you can see right in here, and you get oversold on the projection oscillator, you have a high probability of a bounce. So that gives me a sense that with momentum strong, it's going to be resistant to very much on the downside. Still, we look like we're in a wide range. You can see this trend line coming down, this one coming up. That's really 1320, 1365, or 70 on the upside, and I think we're stuck in there right now. I think that you might get a little bounce, but then you're going to get these cycles rolling over and the dollar strength. So I don't think gold has got much going on for it. Maybe a minor downward bias in here, and again, stuck in the range of what we're looking for. Bond market, we're going to look at the 30-year bonds /ZB, and this is bad. Now, again, we're identifying a shifted market in here. When the market extends to the downside, that like we have right in here, it tells us something bad about it. In other words, the downward pressure is so much that the rising phases in here can't give you anything, or they take longer to click in. Bond market, you can see 3 hard days down in a row. We thought that the bond market would be able to make a bottom in here, rally, and then roll out over here for the bigger decline. That was our original projection, but now we see things in here quite a bit different. The problem is that it makes us wonder whether or not the whole rally was this little piece of junk right there, and we're looking at this kind of a trend. That would be a horrible circumstance. If bonds can get a bounce going in here and get into this resistance zone, I will understand it better. I'll get the shift in here, and we'll get a sell up in this area as expected. I'm worried that it's not going to give us that, and that the situation is so much that the Fed needs these to go down or rates to go up, that there can't be much of a bounce. So we're going to look, we're just going to say bad. Momentum, you see this red arrow here turning negative right there. Minor bounces that fail. I mean, the best case I can make is a move up here to 140, 420 or so, and that would be only if the stock market gets a major hit, because I don't know what else is going to help the bond market right now other than a flight to safety. So this is a really bad scenario. It's either they're going to bounce here and then get hit really hard, or we've seen the bounce in here and they're already getting hard, hit to the downside. That is a incredibly ugly scenario we're looking at there, and I would say you get a rally in the bond market, it's just a high probability to sell it if that happens. So now we're going to move over to the stock market. Again, we had a situation where the stock market has it had shortened its pattern and then moved them back out and elongated them. That's a lot of work when that happens, when you're this kind of an analyst, really fighting to understand how markets change. I did a piece yesterday talking about my greatest challenges as a trader. If you haven't seen that, I really think you should watch it. I say that because I can't believe how many emails I received about that video. Slim, 44 years trading, Slim's greatest challenges. I think it's really a must watch, and I tell you that because that's what people are telling me. One of the great challenges as a cycle analyst is that you gotta always be looking at it, even a technical analyst, to see what is the market telling you, and all of these things have messages. So when the market shifted out from this big decline, there were 2 messages in it. Number one, the directional component that pushed this down was powerful. And if that's the case, the probability is high that it fails in the sell zones, in other words, in the resistance zone that we put in there. And you can see that happening. So the little gray line that you see right there was the old pattern, and we leave it in there because we want to see if it still has any effect. And then the shift right over here has been proven by the length of this advance. And now we've rolled over, and we should get into this support zone. So we're going to look for this week for a decline, only the early part of the week, and then finding a bottom and getting a bounce. But we don't think that the bounce is going to be that significant, and this is where the big risk is, way out over here. We think that the peak is in somewhere first or second week of May. That's really where this projects out to. If this declines as we believe in midweek and then comes up, so we're going to look for decline, bounce, and fail is what we're looking for over the next couple of weeks. The support zone right in there, 26.53, which is only 11 points higher than where it is right now, way down over here to 26.14, but we think that middle 50% number right there at 26.34 really kind of is where the support is and where it's likely to stop on the downside. So this support is rising because this pattern's been rising, but it won't be rising anymore after today. So that's basically where the support is. We're going to look for more downside, an attempted bounce next week, possibly into the following week, and then a lot of danger for the market after that, as the market does give us a sense as it fails from this resistance level how important that level is. That's one of the great things about the swing high, swing low analysis, where you assign areas that are the highest probabilities of support and resistance, of places to do trades that are the highest probabilities. When you calculate those and have those in there, then the market tells you as it gets in. Are they moving through? Is the market strong or weak? Or is that a real resistance zone or support zone? And then the market tells you. So that's really the importance. Watch my videos on swing high, swing low analysis. They're really important for you. That is everything. I hope that there was a ton of information for you in this show that was valuable to you. Please do, if you're not a member, become a level 1 member at no cost. Start looking at our stock index report, the beta test. It's free, and you'll be able to send us comments, let us know how you like it, and if it's very complex, tell us. If it's easy to read, tell us. If you'd like to see something in there, tell us. And all of our members, there are so many of you out there, you're getting this. It's in your dashboard right now, so you'll be able to look in there and go to the bottom, and you'll see the form to fill out and send us a little note and let us know what you think. That's it for this show. I want you to be so careful because it is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been